there's like hurdles I could see approaching. And then my only other fears, I just have like a fear of not getting where I want to be within, within a year from now, let's say. And so I want to know just from your perspective, like that's why this call was so important to me. It's not because I have a specific hurdle that has a specific answer. It's more of like, if you were in my shoes, what's one thing you would have told yourself to like level up at my stage?
Do you feel stuck in your real estate investing journey, maybe frustrated by how long it's taking, or there's no progress really? You're not making enough money on your real estate investing? If that's you, it could be because you're stuck in one of the 5 stages of transformation. Good news is I'm going to share with you what those 5 stages are and tell you how you can get out of that rut and move on so that you can become financially free with real estate. Let's do this. Hey, Andrew, how's it going?
It's going great. Thanks for having me, Michael. I'm very happy to meet you. This is crazy. Really
Yeah.
is.
Well, we want to know more about your journey. And normally we have people on the show that have done, have been financially free. They've done a bunch of deals. And sometimes, you kind of forget the stages you were in before and some of the limiting beliefs you maybe have and things you were stuck, and everybody is stuck at a different level. Right? There's always a different level. And I thought it'd be kind of fun to get someone's story who's just started their journey a little bit. So give us a little background on yourself that kind of led you to where you are right now.
Sure. So I just graduated college in May. I'm 22 years old. I've always been involved in different investments throughout my life. I started trading stocks when I was just got out of middle school. So I was always into that. However, I understand the volatility of those types of investments, and I was looking for longer generational wealth and a little more like inflation responsive type of investment. Also something that I could do more daily, because I'm not looking to be like a stockbroker or a trader. So I started this journey and I read your book about 2 months ago. And I thought your book was incredible because like I read other books and a lot of them always ended with like just I had so many more questions than even sometimes I started off in. And yours kind of was more of a guide, and it related more to like the average person trying to get into real estate, like the actual questions that I'd have. So I loved it. And then I met with some people on your team about your deal maker certification process. And then after like a week of thinking about it and going through other programs, kind of comparing where I'd fit best, I went with it. And then I finished the training in about 2 weeks because I was like, I loved it throughout the summer. And that's all I did. 3 weeks, finished the training, binge watched those. Or wait, no, it was like 2 weeks because it was fast watching. And then started the certification process. And in that process, I'm right around starting to contact brokers. I started analyzing deals right through the training. So like the analyzing 5 deals, kind of like I've been doing throughout the whole time. And I don't think I'm going to get perfect at that and for a long time, but I'm just going through it and like looking at different places, looking at different types of like deals and just trying to get more educated, because that's my biggest like hurdle right now is just further education, because I hear so many different things all the time that I'm like trying to like put these vocab words to use and whatever the case may be. So that's kind of where I'm at. And then I want a general insight. I'm 22. I'm in this space. I just started a full-time job. Like my job just started 2 weeks ago. So like I'm in this like area of life that's like I know that this is what I want to do long term. So I wanted to start it even before I even started my full-time job, so that I never had the excuse that I didn't start this journey. So yeah, now I'm at this stage right now where I'm doing the certification process. I'm trying to analyze deals and looking at different like market trackers, and I'm just trying to get a glimpse of like the overall economy and market, trying to get a little smarter with it. But at the same time, I'm starting to go to networking events. I'm going to my first one next week in Chicago. That's where I'm from. I don't know if I said that. Um, and then another hurdle is I'm just a little like weary, or maybe not nervous, but anxious on how I can start getting in touch with brokers, property managers, just other network people like-minded like me. Because at my age, there's hardly anyone my age that I talk to immediately that wants this journey with me. So I feel a little more alone or crazy. I don't know. So
Yeah, that's pretty cool. All right, there's a lot of things you said here, Andrew. So we'll see if we can unpack some of them.
yeah.
Just for, if you're not familiar with our process, we have something called Dealmaker Certification, which has kind of 2 parts, and you mentioned them as a learning process about every part of the syndication process, all the way from finding your market to deals, analyzing deals, raising money, getting a loan, managing it, exiting, all those things. And then there's the certification process, which is more like practicing. And this is
Hmm.
where we require you to, analyze a certain amount of deals, talk to investors, talk to brokers, and put your team in place, your property manager and lender. So, Andrew, it sounds like you're kind of right in the middle of that, which is great. I find that a lot of people buy a course and then they never apply any of it, which is why we added a certification piece to it, And not everyone's going to do it either, but now it's there, right? So if you want to move forward and you want to be quote certified, you have to do those things. And so I don't know if you find that useful, the practicing. Can you talk about how important practice is to help you apply to what you've learned?
The practice so far has helped me because of like exactly what your book said and what you said. It's the confidence. Like I didn't know so many terms. I didn't know how things link together. So the practice not only like helping me analyze deal betters and start getting a grasp of what different numbers can do to purchase prices and your cash on cash, just like the relationship, but like it's setting me up for when I have to start talking to these brokers and property managers. Like I'm not going to sound like lost. So it's helping me in do ways. I think that's the most beneficial part right now is analyzing the deals.
Yeah, confidence. And I
Yeah.
think you said it. I think when you learn something, obviously as a result you have knowledge,
Yeah.
but it doesn't give you confidence. So when you open up your mouth, you're like, "Oh, I'm not really sure yet." But when you speak to brokers repeatedly, or even if you haven't known, this is why we start analyzing deals, because when you start becoming more confident with the numbers, it now gives you more confidence in talking with brokers. What you'll find is after a while, you'll be more knowledgeable about the numbers than the average broker, right? And that gives you a lot of confidence. So that's why we do it. So I'm glad you're following that process on your own. You're kind of, now who's holding you accountable? Are you just a very disciplined person, Andrew? You just get up every day and you're like, I'm going to crush it today. Or like, how are you keeping yourself on track with the process?
No one's really holding me accountable. There's really no one. I made this investment myself and I started it, and it's purely out of I don't want to work for someone and I want to have generational. It's just pure motivation of me. Like a full-time job to me, I always worked in like a traditional setting. My family owns businesses, so I always worked in a setting where it's kind of like that. So when I got into a full-time job after college, I was like, it didn't sit right. Plus, it's just, I love the real estate business. I think it's genius. I think it's been around for centuries for a reason, and it's going to be around for centuries and a reason. So, and I just think it's the easiest way, not the easiest way, but it's the most efficient, maybe easiest after like you learn about it. Like it's hard in the beginning, but it only gets easier the older I get. So the younger I start, faster I'll get there, and the quicker I can make more time for my family when I'm older, create generational wealth versus just being, short term rich.
Well, you have a lot of maturity for being 22 years old. A lot of people have worked 20 years in their life before they realize the insanity of working another 20. And that's when they come to us. We're like, I can't. I don't want to do another 20 years. I need a way out. Now, what is it about you being 22 years old in college, getting started with this journey? In other words, why is the alternative so unattractive to you? Because I mean, look around yourself. I mean, everybody else is either going to maybe grad school or they're all getting a job, right? Meanwhile, you're like, I don't want a job. I don't want this route. So there's a lot of peer pressure around you to do something else. Yet somehow you're finding an alternate path. What gives you the confidence to do that? And why is that plan B so unattractive to you?
Because it's attractive to everyone else. I mean,
You just want what no one
honest,
else wants. That's it.
it's just like to me, it's pure logic. Like I don't understand why someone would be happy working at a job where they're so scared to mess up that if they mess up, they'll find someone like you the next day. There's no security in 9 to 5 jobs, especially when you come out of college. I mean, they love you for the first year so that you could stay, but if you mess up in 2 years, you lose your job. You got to go find somewhere else. Like, of course, I'm going to find a job after college because I'm not going to sit with no income. I do need income. But the reason I started this journey before I ever started my full time job was that, like, not that I had the fear this would happen, but the like wasting time or pushing back on starting the journey because I was like, oh, I'm too busy with this job now. I'll start in a month. Like, I'm new. I got to like be good. Now that I started this before, I'm tackling both at the same time. And like, this is my alternative. Like, I push meetings today so I can do this. This is more important because this is long term.
Yeah,
When my
I
job
love
right
that.
now is short term.
Do you feel like your job is making your path to real estate financial freedom more difficult? Are you struggling with the time and the pressure on you?
Well, I did start only 3 weeks ago, so I don't really know. Um, no, I mean I'm meeting great people, and so I think work is also a huge networking thing. Are there like people like me in the company I work at? Maybe, maybe not. But I mean, it's
Yeah,
an international company, so I don't know.
I love it. You do have a great opportunity right now because do you have a family right now?
Yeah. Well, no,
Okay.
with my parents, I don't have like a kid or wife or
Yeah, that's
anything.
that's what I'm saying. I mean, like I said, most people want realize the insanity after they've worked a few years, and at that point, they're typically in management positions. They have more responsibility. They have families. They have a house. So the pressure on both time and resources is much greater at that
Mhm.
age. And so you have the ability now to kind of set your life up, in a safer environment. Having said that, you're still gonna have now you have a full time job, and you probably have hobbies and friends you want to do stuff with, and there's going to be conflict between how you're going to spend every single hour. Like,
Right.
what do you do to kind of protect your time? Are there any disciplines that you've put in place so you can focus on the things that matter to you?
Yeah. Yeah, of course. Let's say I just have a typical work day, get up 9, come home at 5, and after that it's at least an hour for just fitness because I just have always been an athlete, fitness. And after that, I'll dive into real estate stuff. 2 hours. I don't exhaust myself for four and force information into me because it's not effective. I'll either, watch a YouTube video, continue doing the certification process. Sometimes like I'll get a little tired doing one thing or the other. So I'll do the certification process, today after work, do it for an hour or two, analyze one or two deals, like, okay, you know what? I learned something today. Tomorrow, maybe it's a different type of day. Just in my spare time on the train, I'll watch a video that I saw on YouTube or just someone speak about it on Instagram. It doesn't always have to be through like the same certification process. I just continually take in knowledge and listen to it so much that like it's become just like someone listening to music. So that, and then it got easy. Like it just built the evidence there. Done. I don't know.
So you're doing something, a little something every single day, and you do it long
Mm-hmm.
enough, and it becomes a habit, like listening to music. Yeah, I love
Exactly.
that. That's the whole point of building habits. It becomes effortless and automatic, and maybe even a little enjoyable. It doesn't have to be necessarily, but at least automatic. Now you said something a little earlier, Andrew, where you talked about, man, you kind of feel a little lonely, right? Because you're
Yeah.
22 years old, and you might think it's because of your age, but the truth is it's not because of your age at all. It's simply because you want to do something that no one else around you does, right? Not your friends, not your family, not your coworkers, like no one. And the thing is, they kind of think you're kind of crazy. And the
They
problem
do.
is if you're sitting there stewing your own, juices for a little while, then you might start to think that you are in fact crazy. And so the question is, what are you doing about that, right? Because you can't be there by yourself because you will literally go crazy a little bit. You have to be in some kind of community of like-minded people. So what have you done or what are you going to do to kind of fix that?
Yeah, that little cycle kind of hit me about a week and a half ago, and I was like, wow, like this is going to be a lot harder than I think making a network, especially when everyone in my network's probably going to be older than me or like not at the same drive. They're going to have more risk. They're going to have a higher tolerance for risk. And I thought about that. So I was like, all right, one, I'm going to start going to meetups. And I asked in the DMM or the mastermind, sorry for viewers, but what are the easiest ways people find meetups? What are some free ones? Just get my feet a little wet. So I'm going to the first Windy City meetup in Chicago next week
Nice.
or 21st. And I'm just going to I mean, I find myself like I'm outgoing. I'm just gonna meet people, and I think that that's how I've always gone with life. I started this. I answered this pot or the post. Now I'm here. Like I just keep moving forward. I don't know how to say like how to keep myself not going crazy with it. It's more of just like knowing this is where my heart is. Like I think I'm correct, and that I'm gonna just keep moving forward in terms of meeting people and like stay the course. It's gonna work out. I don't know.
Yeah, definitely. I think meetups is great because you get together in person. What about virtually? What do you think you can do virtually? Can you network virtually somehow? You mentioned the Dealmaker Mastermind. What is that, and how can you use things like it in a similar way?
Yeah, the mastermind's it's a large community of people like-minded. So it's a great platform that was created by you and your team, and I like it because I get a lot of notifications a day of someone having a new opportunity and or like someone that closed on a deal. So I need to do a little better on utilizing the mastermind. I will admit, I haven't posted since just my introduction. I read what people post. Sometimes it's not applicable to me, but it's cool just to see what people are up to. I've done a little of the SDA workshops through them, but I haven't networked on them necessarily.
Hmm.
So
Hmm.
I need to probably work my way around that community a little better, considering like it's built for that. So
Yeah, I think so too, because it's a specific community around multifamily specifically. I think
right.
one of the challenges you'll find with meetups is that there's 95% are doing something else. They're
Hmm.
flipping, landlording, buying land and notes and that kind of stuff. And it's going to be very few people that are going to be doing multifamily. There are going to be some, so you should definitely network with that. But definitely leverage these online communities that you're already in. Ours is a great place to connect. So really figure out a way to connect, become more active in the community, maybe contribute, because you know how to analyze deals. You have something to contribute. You've talked to brokers. Share your conversation with a broker. It was an awful conversation. Here's what I learned. Like stuff like that is really valuable to people. And then set up meetings with people. I mean, you can be honestly. I remember interviewing a couple lived in London. They're Americans, and they literally did a series of deals in the States by doing exactly this was during COVID even. And they would just set up calls. Anyone they would meet online, they would go, hey, you want to do a Zoom call? No particular reason, no rhyme or agenda, just, hey, you want to connect? And they just schedule like one a day. And that's how they found their entire team just by, and then some are like, oh, that's cool, but others, they really hit it. And they
Yeah,
really connected with people. And so maybe consider mining the mastermind in that way. And that's maybe one thing you can try.
that is a good idea. Yeah, because there needs to be something that levels me up, get to the
Yeah.
next level.
And
Because I could have all
another,
this info and never apply it.
and when you have those conversations, the other thing you can do is then organize your own little mini mastermind. So this is like imagine like a small group
Hmm.
that meets every couple of weeks, right? So imagine you with 5, 6 other people, and you all are committed to checking in with each other for accountability and support.
Yeah,
We do this in our mentoring program. We put our mentoring students in these things, and people freaking love it. I'm in
yeah,
I'm in 2 of those myself, and yes, we get together in person as well. But it's really that small group environment that's so valuable. So that's another thing that you can consider doing. But I think community is very important. And you kind of just have our online course, obviously, so you have to work on it a little harder, but you're still connected to the Dealmaker Mastermind, the online community. So leverage that as well. What else? What are some other things that you're struggling with right now? We can maybe help you with.
Another thing well, one, it's mostly just like the starting the network thing, and that's just including also talking to brokers and property managers. Like I said, I'm going through that part in the certification, so I got to refresh. Like, okay, like is this the correct way to go about it? That's kind of where my hurdle's at. And then my other hurdle's at more of like, I don't. It, I am trying to look into the future and like I can kind of only, how do I say this? Like go in an area outside of the Chicagoland area. I can fly and everywhere, but I don't have a car to go super far. So like I'm kind of limited on where I can go, but at the same time I'm at a place where I'm figuring that out. And that's neglecting the real estate. So there's like hurdles I could see approaching. And then my only other fears, I just have like a fear of not getting where I want to be within a year from now, let's say. And so I want to know just from your perspective, like that's why this call was so important to me. It's not because I have a specific hurdle that has a specific answer. It's more of like, if you were in my shoes, what's the one thing you could have told yourself to like level up at my stage? And other than, networking in the mastermind community, is there something else? If there's not, then okay. But
Well, so a couple things come to mind. Number one, consistency is key. And you're already doing a little bit every day. So I feel like you've got that licked. A lot of people are very inconsistent. They might fall off for weeks, months, and some fall off permanently. Doing a little bit every single day will keep you on track. So you already have the habit built to do something every single day, which is absolutely important. So don't lose that. The second one is a commitment to the activities. So, Hal Elrod has a book called The Miracle Equation. Have you read that book yet?
no.
Yeah, go ahead and read it. Miracle Equation. It redefines the way that goal setting is defined, at least from my mind. Normally, goals are very specific. They have deadlines, blah, blah, blah. They're written in the present tense. Okay, I get all that. But Hal Elrod argues that instead of committing to a deadline, okay, commit instead to the activities that ultimately lead to the deadline. So your 1 year goal, this is what triggered that. It's like, well, you feel like you need to get to a certain place in 1 year. Maybe you might say, my gosh, I should surely have my first deal done in 1 year. Now let's imagine that a year comes and goes and you don't have a first deal yet. Now what happens? Now it could happen that you're now discouraged or angry, and you might decide to walk away from the whole damn thing because obviously it's maybe working for others but not working for you. And it's really only because you self-imposed an arbitrary deadline. Mm-hmm. So instead of doing that, simply commit to the activities that lead to your desired outcome, right? So if you want to find a deal, what's the activity or activities that you should commit to every single week? What is that?
I got it.
Well, I know, tell me, what are the activities that you should be doing?
Analyzing deals, calling brokers, calling property managers, building a team, basically building a team.
Perfect. Now, if you want to raise capital, what are the activities you should commit to there?
Talking to friends and family, understanding how much capital is needed, what type of capital I need, planning that out. Just also talking to different investors. So perfect.
Yeah, it's talking to potential investors, right? So at one point, it gets pretty simple. You're analyzing deals, and every time when I say analyze deal, I'm almost making an offer. It could be via email, verbal, informal, right? And then number 2 is talking to investors. That's it, right? And if you continue doing that, you'll eventually find a deal, and you'll eventually raise money as well. There's a third activity, which is finding a partner, a potential partner.
Yeah.
And let's talk about it. There's really 2 major roles in an early syndication. One, there's typically 2 partners in a syndication. One is more the deal finder, and one is more the capital raiser. Mm-hmm. Which of the two, and sometimes, which of the 2 do you gravitate more towards?
I'm not sure. I think I would be okay doing both.
Yep. Okay.
Because I have a good network for capital raising. That's something that I think I have less stress over. So I don't know. I think I could do good about both.
Well, that's cool. I'm a little bit like you. I'm a little bit of a generalist. I can feel I can do both. Nevertheless, I want you to think about partnering with somebody. So let's say you're getting deal flow. You'll get over the hump of calling brokers, or maybe you won't. Maybe that numbers are so you're hate numbers so badly that just the idea of analyzing deals makes you want to throw up, okay? And you'd rather work investors. Now you're more of a capital raiser, okay? On the other hand, if you're not much of a relationship guy and you're really more of a numbers guy, you're more detail-oriented, you might gravitate more to the deal finding. And then you could be the rare bird that can do a little bit of both, like what I am. However, having said that, that doesn't mean you should do everything yourself, right? Because there's only so many hours in a day. I mean, you could probably spend 10 hours a week just analyzing deals and making offers, and then you can spend just 10 hours a week talking to investors and raising money. Now it's 20 hours. You don't actually have 20 hours. You have maybe 10 hours total. So you can do 5 and 5. Now, if you pursue both activities at once, you'll eventually get there. It'll just take longer. But if you were to focus on only one of those 2 activities and take your entire 10 hours on one of those 2 activities, it will obviously, there will have results sooner, rather than splitting your time. So it's a matter of practicality. At that point, you got to ask yourself a question: what do you enjoy most? What are you better at doing? And you focus on that one activity, and then maybe you partner for the second. Even if you could do both, Andrew, right? Let's say you can find deal and you raise money, which you should. You should always raise money, whether it's 100,000, 200,000, 500, it doesn't really matter. You should always raise money. But regardless of how much money you can raise, especially in the early on, there's going to be to limit of how much you can raise. Now, if you were working with us, with our mentoring program, for example, the average deal size is $4 million, the first one, which probably sounds big to you. I mean, that sounds big to me, but it's because of this thing. It's because of this partnering aspect of it, so let's say you're a deal finder, okay? Let's say you're more of a deal finder, and you decide to focus your time on deal finding. So you're talking to brokers, analyzing deals, you're building relationships, okay? And now you're getting deal flow. You have your counterpart who's a capital raiser, who again has no interest in analyzing deals because it requires numbers. And therefore they don't want to talk to brokers because it requires talking about numbers, which they don't like. They're much more, they'd rather talk to their investors. And there are people who just have the gift of gab and relationships and networking, and they can easily raise $1 million. That's easy for them. Now, if I can raise $1 million, I can buy a $4 million deal. So it's really that simple. And people with access to capital have the opposite problem. They don't have deal flow. So they need deal finders. They also they're not as detail oriented, so they can't really handle the due diligence process, which is detail oriented. And sometimes they don't really love some of the stuff on the back end, right? And so this is why those partnerships are so powerful. And so that's one thing to consider, is looking for a partner in the right way. Like I said, there's only 2 roles in the early syndication one. And you want to make sure that you choose the one that you want to focus on and find your counterpart. The roles have to be very clear, right? So they have to be, one of you is going to be focused on finding deals, and one of you is going to focus on raising capital. That doesn't mean that the capital raiser shouldn't know how to underwrite deals, because they need to know the numbers to explain it to investors. They should also know due diligence, because they have to explain it to the investors, right? So it's not like they're completely ignorant, and you, as a deal finder, should also know how to raise capital, right? So there's overlap, but the accountability is only one person in the partnership.
Okay, I understand. That makes sense. Yeah, I can see how that could be a lot more important too down the line too. Having a partner, at least, and it's more of also like the accountability with each other too. You trust them, and yeah.
But at the end of the day, Andrew, the thing that matters most is doing that first deal, right? If you bring in a partner, you can do bigger deals. But even if you think you can raise a couple $100,000, well, then you buy a $500,000 building, 600, right? Whatever that is in Chicago, or wherever that is. That's the most important thing, is getting that first deal done, because as you know, that changes everything, that first deal. So it doesn't really matter how big it is. I mean, there's certain things you can do. You can have a mentor and a partner, and therefore your deals are going to be bigger. That's cool, super cool. And it's more effective and efficient to get to your goals faster. But at the end of the day, doing your first deal is really what gets you in the game. So definitely focus on that.
I have a general question that I was always confused about in terms of buying a piece of property. Is like the best loan type you can have. I was always confused about. And then also, like, let's say I'm buying a $500,000 property, and like you get X for the loan. Do you use some part of the loan for your earnest money deposit, and for like, is the loan supposed to encapsulate everything? Or let's say you have $100,000 in the bank, then what do you do with, like, you loan the rest, or do you raise capital for the rest? Like, I always was confused about money in the bank, loan, raising money, and like, what's the best combination for yourself?
All right, so you're asking me a technical question. I will answer it, but I'm going to highlight something about the question. So let me answer the question first before I comment on the kind of question you asked. So the loan, it typically covers obviously the real estate itself, and it could, depending on the type of loan, can cover part of the construction, any rehab. It typically never covers any kind of fees you want to take, closing costs. It doesn't cover some of those things. So you have, or of course the equity, right? So typically you raise the equity piece to pay for yourself, as well as some of the closing costs. That's kind of equity that you have to raise, in general. But that's a very specific question, and you only know that question because you've already kind of know in general about financing commercial properties. And it's a very specific question sometimes, and you're getting into kind of situational things. Like you get into situation things where you're talking to a mortgage broker and they're telling you one thing and you're like, daggone it, does that make sense? Like, is that right? Is that good? I don't even know. Right? And so this is why working with an advisor or an experienced person or a mentor is super valuable. And you can pay for those people, obviously, right? If you were in a mentoring program, you'd be working side by side, but you have to have the financial means to invest in someone like that. If you don't, and you can't, then you have to hustle to find that person. So in your networking, find that person that you can pick their brain to help answer those questions. And they'll take a certain amount of questions, and they'll tell, hey, Andrew, back off. You're killing me with all this stuff. But it comes into, you're getting into the point now where you're getting into a live deal scenario where things are situational. I mean, every single deal is different. And so you're not going to learn that stuff in a course, and you have to have someone who's experienced to fall back on. So find that person. Again, either work with us if you can have the ability to do that, invest in yourself, or see if through your networking if you can find those people as well. Yeah. Because that's not the last question that you're going to come up with on a situational technical question. There's going to be many of them. And so
that's I'm glad that I I asked that because I was trying to think about what really is the largest hurdle. And I forget that it really is not having a mentor or someone to ask these questions to, because then I'm stuck Googling. And once I get into Google, I'm hearing all sorts of things. And I'm like, whoa, I don't even know what's going on now. But yeah,
Yeah.
that's that probably now that I could say with the hurdles and things, it's finding a mentor, finding someone that will guide a little bit. So
That's awesome. All right, Andrew, well,
um
this is great. I think you're on the right track, man. I think fundamentally, the thing you're already doing is consistency. That's it, right? Could you work more efficiently if you had a mentor? Yes. Could you work more efficiently if you had access to a larger network of capital? Yes. Okay. And maybe you'll do that. But at the end of the day, even if you don't or you can't, you will still get to that level of success you want. It may take a little longer because the deals take a little smaller. You might make a mistake here and there. But at the end of the thing, and this is difficult to teach, is consistency. And you're already doing that. So I would say, yes, keep doing that. That's the one thing you're already doing. And that is the key to success, is consistency. So I appreciate you coming on here and sharing some of your experience with us, man.
yeah, I thank you too. I literally just read your book not even 3 months ago, and like the fact that I'm even here now on a Zoom with you is insane. So I loved your book, and I love what you're doing for people. I love how you are not on a stage of the real estate business where it's just trying to sell everyone like a single story, like some of the guru ones you talk about in your books. Like that's the best part about your community. So I thank you for that. I thank you for staying real and like helpful and actually trying to help people, not trying to make an extra buck for yourself while like not being involved in your mentors and everything live. So thank you. This has been awesome. Even just meeting you, like even if you I just this was just awesome overall. So
All right, hopefully that was helpful. You can identify if you're stuck in your real estate investing, you can kind of recognize what stage you're in and maybe what you need to do to get out of that stage into the next stage as well. Now, if you want to find out more about investing apartments, it's actually much easier than you think it might be. I want you to watch my masterclass. It's called Apartments 101. And it gives you an introduction into apartments, why they're so good, why they're better than single family house investing, and more importantly, how you can get started even if you have no experience, you don't have a bunch of money in the bank, how you can break into this game and literally within 6 to 18 months, become financially free with real estate. Check it out. It's apartments101.co. Catch you later.